I'm David Bank, and from Impact Alpha, this is an Agents of Impact podcast.
We've sat in rooms where actually people were debating whether impact is real investing. But we've also sat, with families in informal settlements, whether in India and Indonesia, where, a single access to financial product can actually change the trajectory for their kids. So, after that, the debate becomes like a luxury. So to reiterate, I think we really feel that, the opportunities are real, the returns are real, and the needs won't wait.
That's Eliza Foo, who leads impact investing at Temasek, the Singapore-based global investment company whose asset base recently crossed $400 billion. I spoke with Eliza about Temasek's mission, Singapore's impact ecosystem, and what's next in emerging markets impact investing. And she shared her advice for asset allocators still skeptical about impact. I think you'll enjoy our conversation. Eliza Foo, welcome to the podcast.
Well, thanks for having me.
It's so exciting to be able to talk with you. I can't tell you how many times we've mentioned and written about Temasek in Impact Alpha, and it just shows up all over the space. And so we're delighted to be able to dig in a little bit with you today. And I think maybe let's just start at the basics. Just tell us what Temasek is. What kind of creature in the impact ecosystem it is.
Well, similarly as well, I've heard so much about you and the team, so it's real privilege to be here. So maybe a short intro about what Temasek does. So Temasek is a global investment company headquartered in Singapore. And for the very first time, our portfolio actually crossed the $500 billion mark. So we invest across both listed as well as unlisted assets in a range of different sectors. We describe ourselves as a generational investor, which means we invest with tomorrow in mind so that every generation prospers. So sustainability is one of our 4 key pillars of our long-term T2030 strategy. And in fact, our sustainability strategy focuses on net zero, nature positive, and inclusive growth. And within that broader sustainability strategy sits our impact investing.
And that's the team you lead.
That's right.
And just tell us how impact plays out across all those themes that you mentioned.
Sure, but maybe a bit on our mission. So our mission is to achieve prosperity in purpose. We have a dual mandate to deliver market financial returns, but positive impact at scale. So practically, that means focusing on underserved communities in Asia, but also in Africa and Latin America, across financial services, healthcare, and climate solutions.
I think sometimes people mistake Temasek for a sovereign wealth fund. That's not really accurate, right?
No, I think the Sovereign Wealth Fund for Singapore is a GIC. We're actually an independent global investment company based in Singapore, but we have a long-term mindset of being a generational investor.
Got it. And so it's interesting with that background, the fact that you have these sustainability themes and this kind of generational perspective. Where do you think that comes from?
It comes from our the origins of the beginning. Also comes from the leaders of how do we want to make sure we grow the capital sustainably so that it compounds, but also do good as well. That's really our philosophy.
And so you've mentioned, obviously, underserved populations in Asia, but also in Latin America and Africa. So what are you seeing, globally in those markets this year, maybe that the rest of the world hasn't yet woken up to?
So yeah, some of the areas that's interesting for me, less because it's unknown, but I think more because it's probably less appreciated versus where capital is flowing into. So one, I think secondaries and liquidity, I feel is quietly becoming the unlock. A lot of people is focusing on deployment, which is important, but I think the more important conversation is really about recycling. So I feel the fund that can really solve DPI in emerging markets will actually define, the next decade.
DPI, of course, being distribution of paid-in capital. Do I have that right?
Yeah,
and that's
and it's really exits. How do you make sure that the capital do flow back, to the LPs?
And people are very concerned about that, as you say, because that lets them redeploy into new things.
Yeah, I mean, it's been a challenging last few years from an environment perspective, right? Of course, you see geopolitics, there's AI, in terms of the capital markets as well. So how do we really work together to ensure some of the exits? Because what's important is the capital coming back can also be capital that we put to work again, right? Whether it's to the next entrepreneur and to the next community. So I think that aspect is going to be quite important.
And so I know that there was just a report put out that Temasek put out showing quite good returns and also growth, as you say, in the portfolio. You said 500 billion Singapore, which is about crossing 400 billion in US, I believe. So where are you seeing that growth in particular coming from?
Yeah, so we're very excited, as you mentioned, over the past decade, our net portfolio value have actually doubled. I think this shows the disciplined capital allocation across multiple cycles. I think, in fact, we are seeing opportunities whether in AI, core plus infrastructure, which really combines the resilience of traditional infrastructure like utilities with growth potential from AI, renewables, data centers, and energy transition as well. So we're quite excited, but also looking long-term trends. And of course, we also did issue our sustainability report, so do take a look. And the focus there is more on kind of pragmatic ambition. Yeah.
Pragmatic ambition. Just say a little bit more about that.
Yeah, I mean, it's understanding we're staying committed to our long-term sustainability and impact goals. But of course, I think recognizing today's realities, right? The geopolitics I've mentioned, capital constraint in AI, and pivot accordingly where it makes sense. But to remain disciplined for both the returns and on the impact side.
And then I know that Temasek has been very active in climate, in particular climate adaptation. It's been a tough few years for climate investing and for climate policy, maybe globally. Temasek, I think, has stayed the course on the commitment to climate.
I think that's important, right? It's really long term. I mean, these issues are here to stay. We always say there are no returns from a dead planet or divided society. So I think it's really our responsibility to leave the planet a better place for future generations as well. Yeah, so I think it's still important to kind of focus on areas and how we tackle some of the challenges out there.
And in particular, climate adaptation, which is always, as you know, sort of under financed compared to climate mitigation. And there was a report that you and BCG last year put out that called it one of the defining markets of the future. You've actually been kind of bullish on adaptation, things like climate resilient building materials and flood defense systems. All those kinds of things are growing quite rapidly now. I think people are starting to wake up to the need for all that.
I think most of capital still focuses in terms of mitigation, right? So renewables, electric vehicles, because they're probably more familiar and easier to underwrite. But as you mentioned, I think it's important to focus on adaptation. So what we see in terms of climate resilient agriculture, some other like cooling solutions, water, resilient infrastructure. I actually invested in renewables in Asia 15 years ago in the early days, right? So adaptation today actually feels like renewables back then. So earlier, harder, less crowded. But actually, this is where you see the interesting opportunities come as well. But to have, we need to learn the lessons from the last 15 to 20 years, how to do better, how to help scale some of the solutions from the early stage so that they can grow as well.
So Singapore, it's kind of come up very rapidly now, or at least in visibility in the impact investing ecosystem. Temasek, I think, is probably at the center of that. So what would you say is the sort of reason for that? What's the region's unique edge, if any, in impact, and what are the gaps?
Yeah, see, I think Asia itself, there's a natural orientation towards long-term patient capital, right? It thinks about generation, it thinks about kind of long-term stewardship that helps. I think Asia's advantage of building newer, we can leapfrog into digital and mobile models rather than retrofitting kind of existing systems. I think that helps tremendously. And I think the nuance, Asia isn't just one market. I think you need to appreciate the differences across the market while sequencing it appropriately, right? So you have your India exits and depth. You have kind of Southeast Asia inclusion and climate momentum. Of course, you also have North Asia in terms of capital. And to be able to move the kind of capital and lessons across these markets and see this as an opportunity. So you've mentioned Singapore, right? Zooming into, I think, Singapore's unique role as a trusted hub, right? It's neutral, it's well regulated, and I think we're starting to see a lot of capital, kind of talent, and convening sitting here as well. So hopefully we can encourage more to come and then build this ecosystem on its own.
And do you think it has a kind of impact flavor as it grows up, particularly in Singapore, but across Asia? As you say, there's family businesses. We've written about how operating businesses are baking sustainability not just into their investments but also into their operations. Is there kind of a sort of Asian flavor of impact that's coming to the fore now?
There is a gap currently, right? I think with the development funding being held back, I think the roles of private sector as well as family offices to really step up, right? So I personally feel that the gap will be addressed by local capital, not only Western capital, right? Why? As you mentioned, I think a lot of family offices and institutional capital in Asia, they understand the market. They are already here and they're starting to grow in terms of the balance sheet. So getting them more active will help to kind of play a role so that we can deploy more capital into the space. But also working, is Singapore working within Southeast Asia and helping one another to kind of share in terms of lessons learned so that we can grow together as well.
Large investors like Temasek are sometimes called universal owners with enough capital that you have to be kind of invested across the whole market. Therefore, you have a more systemic maybe take on things. You can't kind of outrun the fundamental trends. Do you think there's kind of like a signaling function that large LPs like Temasek can play in letting other asset owners know where things might be going?
Yeah, I mean, so we are also quite unique because you mentioned earlier, because as a generational investor, we also can operate on a wider lens. Sitting on a large platform, we can see if impact solution can be interesting across our broader platform, right? So it's not just a single deal on its own. So that helps. We also, don't do this alone. We work closely, for example, with Temasek Trust. So hence, our broader ecosystem can cover across the spectrum, from concessional to catalytic to fully commercial capital, right? So I think the ability to be deliberate on who takes on what risk is actually quite interesting. But definitely, I think investors and LPs now are still looking for proof of DPI. Like I mentioned, peer signaling is important, especially in the space where we're still building up the track record. So I think for LPs to be able to point to others who have done this and done this right, it's important as we kind of build confidence as well. Yeah.
So what would be one thing that you would tell an asset owner who's curious but still skeptical about impact investing? What do they need to understand before they commit their first dollar?
Well, if I had to choose one thing, I think don't treat impact as a separate softer bucket. I think apply the same rigor as you would anywhere else. Same DD, the same underwriting, and everything else will follow after. Once you apply the same rigor, actually the hard trade-off should fall away as well. So I think the field actually rewards learning in motion. So deploying a small commitment will actually teach you so much more than doing due diligence at the sideline.
And just more personally, you came to impact investing, after years in banking and private equity. Maybe tell us a little bit about how you made that switch, and then what keeps you convinced that this is where serious capital should be moving.
Yeah, so I actually started my career in what you call classic finance. So investment banking and private equity, which I think is very important as it gives you the fundamentals of finance. But deep down, I knew I wanted to do something more fulfilling and more purposeful, right? And that's where I came across the concept of impact investing, and then decided that this was where I wanted to build my next phase of career. But why? I mean, firstly, I think you see actually the needs have just grown. In fact, the challenges have become larger, not smaller. So I think that's really the context of every investor will need to operate into, whether or not it's priced in. You're seeing stronger fundamentals. You have better unit economics. You have more impressive founders with very deep local context. And what we say about a green discount concept. So a lot of the emerging market solutions are now becoming cost competitive or actually cheaper than the incumbent. So that's an investment case, right? Not a moral one as well. So I think we are quite excited about the opportunities, and the proof points are really accumulating as well.
What we call that over here is impact alpha. So,
Oh, indeed.
uh,
So sorry, one more stats. I mean, it's very clear, right? I think by 2050, emerging markets will be actually home to majority of the global population. And in fact, will contribute to the global GDP growth, right? So the underserved won't be niche. In fact, they will be majority. So we're talking about tier 2, tier 3 cities, MSMEs, and rural areas. So we are quite excited about the scale potential there.
And so you're making really the business case, the financial case. That impact is really a driver of returns. It's not, as you say, some affectation or just an aspiration. It's really the fundamentals of the business, and Temasek is proving that out.
Indeed, I think what's also exciting and helping is really AI and technology. They will be the next multiplier, especially within EM, right? I think in reality, one of the constraints in emerging markets is the cost to serve, right? I think reaching smallholder farmers, rural patient, or first-time borrower are often too expensive to be commercial, right? But with AI and digitization, they are actually collapsing the cost. So, for example, you can do credit underwriting using alternate data. You have telehealth, AI reaching kind of tier 3 cities. In fact, we're also seeing kind of agri advisory or like supply chain running from a phone. So that's amazing, right? So business models that were probably not viable like 5 years ago, we see now actually scalable and investable, and that's really exciting.
So the world is coming to your doorstep, and some of the things that you've been working on for years are now coming to be more viable and more and coming to pass.
Yeah, but I think it's still important to be disciplined. I think to learn from what works, what doesn't. And I really feel from an impact space, people tend to be quite collaborative. We speak to fellow LPs, the GPs, and that's why we organize our impact investing roundtable during Ecosperity. It's really a space for people to come together to really collaborate and really share lessons learned. So we have to be, and also to be patient. This is also a longer term goal, right? That we want to work together.
Yeah, I was taken by Ecosperity's theme, powered by innovation, driven with intent. Intent is interesting. Why do you think intent is so important?
I mean, that's really embedded in terms of what we do, especially within impact as well. Intent actually changes who the innovation is designed for. I think there's plenty of tech that helps efficiency, but these are really for the well-served, right? So intentional innovation asks, does this serve the last mile, the informal economy? If you take a look at UPI in India, to me, that's the classic example, right? It's a payment infrastructure designed with inclusion as a goal. And that has actually unlocked credit, savings, insurance for hundreds of millions that was previously, invisible to the formal economy as well. I think the other aspect, of course, we see technology, but it helps to underwrite the downside case, right? If you have technology without intent, it creates a further divide. This algorithmic exclusion, automation as well. So I think that's really important, right? How do you actually factor that as part of the design, so that this is also taken into consideration as part of risk management.
So, Eliza, to give our listeners just a little clue of what you're looking at next, or what makes you most excited now.
As I've mentioned, very excited about the emerging markets and the opportunities there, but we're staying very focused on the portfolio. I think working with our portfolio, our GPs and the companies to make sure we deliver on both the returns and the impact, but also I think supporting the broader ecosystem, right? So whether it's on research, thought leadership, standards and convening, so that as a whole industry, we mature together rather than each of us doing kind of separate different things. And definitely hoping more allocators to come in. So maybe, you probably have to understand where the allocators' strategy and focus, and maybe go to where they are. So whether it's a separate sleeve with the right returns and risk, whether it's co-investments with a trusted partner, or maybe just doing within the existing structure, so that there's a single mandate that you can say yes to.
Well, I'm sure that allocators and the GPs are already beating a path to your door, and I think they'll find that you have quite a lot to offer, and as we do, and we're so happy to have you on the podcast, and we'll continue to be watching Temasek closely, and hope you'll come back and let us know how things are going. So thank you so much, Eliza Foo.
Yeah, but maybe if I can close with one observations, we've sat in rooms where actually people were debating whether impact is real investing. But we've also said, with families and informal settlements, whether in India and Indonesia, where a single access to financial product can actually change the trajectory for their kids. So after that, the debate becomes like a luxury. So to reiterate, I think we really feel that the opportunities are real, the returns are real, and the needs won't wait. But thanks for having me. It's been a pleasure.
A pleasure is ours. Thank you so much, Eliza.
Thank you.
That's going to do it for this Agents of Impact podcast. Big thanks to Eliza, to our producer Isaac Silk, to the whole team at Impact Alpha, and to all of you Agents of Impact, with deep gratitude for all that you do.